And it's the last one for the first week in 2022. Great to have you join us. It's Business Morning live on Channels Television. I'm Ladi Williams. First off, let's take a look at what's in the news. See, oil prices edged up today, heading for the biggest weekly gain since mid-September, fueled by supply worries amid escalating unrest in Kazakhstan and outages in Libya. Brent crude futures climbed 57 cents to $82.56 a barrel after a 1.5% jump in the previous session. U.S. West Texas Intermediate crude futures rose 67 cents to $80.13 a barrel, extending a 2.1% gain in the previous session. Brent and WTI were on track for more than 6% gain in the first week of the year, with prices at their highest since late November as supply concerns overtook worries that the rapid spread of the Omicron coronavirus variant might hurt demand. And back here, 2.24 trillion naira, that's the amount generated as revenue by the Nigeria Customs Service for the year 2021. A statement, the NCS says the amount exceeded the 1.678 trillion naira target set for 2021 and presents an increase of 43.45% from revenue generated in 2020. The NCS attributes the rise in revenue to the organization's adaptation to changes triggered by the COVID-19 pandemic, as well as ongoing reforms in service. It further adds that over 90% of its activities, which includes e-customs project, have been integrated and automated for takeoff this year. The National Social Investment Program says it has successfully alleviated the living conditions of millions of Nigerians through its various interventions. The national coordinator of the NSIP, Dr. Omar Bundir, made this known to journalists at the annual strategic review meeting for NISP's 2021 performance in Abuja. Do take a listen.
The budget for this year for the NSIP is reasonably within the region of 300 to 400 billion. Most of which is actually recurrent to pay for the N-Power and the school feeding program. Under the N-Power, just the graduate program, we have the ones that we have graduated, batches A and B, which is 500,000 young people. We now have a total of 1 million young people onboarded. On the conditional cash transfer, we have more than 10 million applicants, all nationwide, but we have successfully managed to onboard 2 million, and we're consistently paying these households 5,000 naira per month. The first challenge is that there are people who will try to scuttle the program. There are reports whereby we see schools that don't exist are actually reported. We find this and we drop it. Also on the N-Power, there are some young people who don't go to teach in the schools. We catch those too and exit them. There are people who are supposed to be on the N-Agro, who are supposed to be talking to farmers. They don't go to farms. We have offices at the state level for both the register and also the conditional cash transfer. The registration is done at the community level. So if you want to register, your community will have to recognize you as a poor and vulnerable household, and you will be on that register.
All right, now to our first conversation. Nigeria's cinema industry emerged stronger from the ravages of global pandemic last year, with ticket sales doubling figures realized in 2020. The total weekend movie ticket sales rose by 100% to 2.4 billion naira in 2021 from 1.2 billion naira in 2020, according to data by the Cinema Exhibitors Association of Nigeria. Well, let's get analysis now from Mary Amadi Emina, creative industry analyst, Steers Business. Great to have you. Good morning.
Hi, good morning, Ladi.
Yeah, quite an impressive number there for 2021, considering the headwinds of COVID variants, inflation amongst others. What drove this, because cinemas were supposed to be operating at half capacity, if I remember.
Yes, exactly. So cinemas in Nigeria were operating at, and are still operating at half capacity. But I believe what drove this demand was basically content, A lot of local content was released last year, and I think Nigerians are beginning to appreciate Nollywood films now. So I think because of that, the demand was, was really, really high. So I think content is really a key thing in terms of like cinemas in Nigeria right now and across the world, to be honest.
Meanwhile, the figure was 41.5% lower than the 4.1 billion now recorded as ticket sales in 2019.
Yes. So just to reiterate, currently cinemas are operating at 0.5%. At 2019, the capacity of cinema halls were 100%. So even though 2021 figures are half of 2019, it still shows a remarkable rebound for cinemas in Nigeria. Because again, not a lot of capacity was filled up in cinema halls across Nigeria, across the nation. So I think cinema operators are doing a very, very good job. I think their focus, their key focus on the type of movies that they're releasing and showing on cinemas right now is really, really key. And again, I think it just goes to show what's going to happen in 2022. I think the rebound for 2022 is very, very, very optimistic, I believe.
All right, let's look at performance now. Nigerian movies, international movies, which ones perform better?
To be honest, Hollywood is still king. And this just goes to show that, we still have a long way to catch up. However, Nollywood is doing remarkably well. So currently on the top 5 list on the CEAN website, out of the 5 movies that are like grossing the highest numbers right now, I think out of 5, 3 of them are Nollywood movies. So we're catching up. However, Hollywood still remains king. And I believe with improvement on our content, our quality, the production, we will definitely catch up to Hollywood movies. We will definitely catch up to Hollywood production. But so far, Hollywood is still king. And, I can't wait for the time when Nollywood will probably surpass Hollywood movies. And I think that time will be something to be very, very, happy about.
Yeah, definitely. That would be the day. But what do you think is driving the resurgence of, cinema culture in Nigeria?
So to be honest, if you think about it from the fact that we've all just emerged, and this is a global thing, we've all just emerged from a lockdown. I think a lot of people are experiencing COVID burnout. So they would just want to be outside. They want to go out. They want to be entertained. They want to be among their friends and family. And I think one key way people are entertained is obviously going to cinemas, watching movies, just escaping, the reality of what is going on, escaping the reality of the pandemic, and just, having a few hours to feel good, to feel happy. And I think movies provide that, atmosphere. Movies provide that opportunity to escape. So I think that's one reason why the resurgence, the rebound is really, really high. People just want to go out. People want to feel good again. People want to, forget about, the pandemic, even though it's still a reality, even though it's still occurring,
And I see streaming, services were, top when the pandemic started. How would you compare, streaming streamers and the cinema performance?
So as at 2021, streaming was still top of the range for movie enthusiasts. But currently, I think now I think the scale is balancing, although cinemas still have an advantage because of the experience that they offer for moviegoers. Right now, I think what we'll be looking at in 2022 is a lot of collaboration between producers, cinema operators, and streaming companies. So for example, in 2021, there's a movie called Red Notice, and that was produced by Netflix. It was released on Netflix and it was also released at cinemas. So I see a lot of collaboration happening in the year 2022. And I hope to see a lot of collaboration from Nollywood producers as well. I mean, we had King of Boys Part 2 being streamed on Netflix. I'm hoping that we'll get a movie blockbuster as well to show on cinemas as well. So we're looking at collaboration, very, very key thing to observe in 2022, collaboration between streaming companies and cinema operators.
And I know the new the finance bill is creating provision for companies that don't have presence in Nigeria, digital companies. Take for instance Netflix, to actually would be charged tax, going into 2022. How do you see this affecting, these streaming giants?
I mean, I think if they're taking advantage of the Nigerian market, if they're taking advantage of the Nigerian consumer, they have to pay some form of levy. And I think they just have to get with the program. They do this in other countries, in other continents, for example, like in Asia and South Korea, they pay tax. to the South Korean government. So I feel like if they want to have a presence in Africa, especially Nigeria, where Nollywood is, king, where Nollywood reigns supreme, they have to just get with the program. They have to pay the price. And I think it's worth, it's worth Netflix looking into. It's worth Netflix doing, because I feel like Nigerian market is such a big market. It's such a huge market to explore with so many potentials. There are lots of producers coming up now. There are lots of movies being released in the next coming months. I think there's nothing bad in the tax that's being levied on Netflix. I think they should really take advantage of it.
And there are concerns that this will be passed on to viewers like us.
Yes, there is that concern. However, right now, I think, regulators and movie operators are trying to find the balance. They're trying to find that sweet spot where it's not too heavy on the pockets of Nigerians, and Nigerians are still able to, perform their civic duty. So I think we just have to wait and see what happens in the coming future, in the coming months of 2022. I'm very, very optimistic about the film industry, to be honest. I think we're doing an amazing job. I think Nollywood producers are doing amazing. So we just have to look forward to what the next couple of months is going to say for Nollywood.
Quite interesting. But Nigeria's media and entertainment industry has been described as, fastest growing, creative industry in the world. It has the potential to become, our greatest export. At a time where government is, looking for revenue, what can be done to, harness this industry?
So I think the one thing that we should look at is investment. So yes, the media and entertainment industry is the fastest growing, but there's not a lot of investment opportunities for local talent. If not for Netflix offering funding opportunities to producers in Nigeria, I don't think we'll be able to have movie productions on platforms like Netflix. And just recently, Amazon Prime has signed a deal with Inkblock Production Studios, to start releasing Nollywood content on Amazon Prime. So I think one major thing that the government should look at is investment opportunities for small film producers, local talent, to be able to boost the economy, to be able to boost the sector, to diversify from oil as a revenue for Nigeria. And then another thing that I think we can also look forward to is just training and workshops, collaboration with Hollywood partners. I feel like everyone knows that Hollywood is still the king in terms of entertainment and movie in the world. So I think partnerships, collaborations, training workshops with Hollywood, and Nollywood, just to help, drive our quality production to like an A standard. I think that's another key thing that we can also, look into.
Right. What would you say are the challenges in the media and entertainment industry right now? I remember it was mostly, copyright and piracy issues.
So I feel like copyright and piracy is still a major problem within the entertainment and film industry. But then I think now we're even looking at the type of quality and the type of content that is being released. I think, with the whole Chief Daddy to the Buckle, you can see that Nigerians are looking for quality content. They're looking for good scripts. They don't just want to be entertained. They want to be informed. They want to be educated. So I think one of the major challenges now is, focusing on the type of quality, the content that is being released, so that we would be able to compete with international partners, international competitors across the world. So yeah, that's one thing I think is a major challenge currently.
And recently, the CBN, in collaboration with the Bankers Committee, developed a loan scheme called the Creative Industry Financing Initiative. What impact can we expect from this?
So I think that, with financing opportunities being available, like that's of what the CBN has done, I'm seeing a lot of local talent tapping into it and coming out of the shadows. Like I said, there's a lot of local talent that is unknown, and they're unknown because of lack of funding. So with this opportunity, I think they will be able to, receive the exposure that they deserve, be able to participate and play on the global platform of the entertainment industry and the film industry across the world.
All right, now let me get your outlook now for the cinema media industry in 2022. What's it looking like?
Like I said, it's looking pretty optimistic. Right now, we're looking at key movies that are going to be released in the coming years. So, for example, Hollywood titles like Black Panther, Avatar, Doctor Strange, and then also Nollywood releases as well. I think it's pretty optimistic. I can't wait to see what's going to happen in the cinema space in the coming months. But I'm looking forward to a trajectory that's going really, really up.
Business opportunities are on the horizon in the Nollywood industry.
Sorry, can you come again?
I said, what business opportunities are on the horizon in the Nollywood industry? We still have variants, the issue of variants, still capable of disrupting, activities going into 2022.
Yes. So like I had mentioned earlier, I think quality content is something that, I feel like Nollywood producers should look into. And, as even though, the variants and different coronavirus variants are they're surfacing across the world. I think, business opportunities like script writing, training, online training are still available. So you don't necessarily have to be physically present for things like that. You can work over the internet like we're doing right now. So yeah, I think opportunities like that are abound right now.
Paint a picture of what the value chain actually looks like there.
Okay, so in terms of movie production, we have pre-production, production, and post-production. So within those categories, you have pre-production, you have your producer, your director, your cast, and your crew. And so under the cast and your crew, you have your actors, your cinematographer, your script writers, and all of that. And then under production, there's the same actors that are also there, where you go into filming, where you're filming the film, you're acting for, I think, really from 1 week to about 6 months, depending on how long or how big or how wide your budget is. And then after production, you have post-production where editing comes in. So you're putting the pieces of what you've captured prior to make it one whole film, to make it cohesive and comprehensible. So this is where your editors come in. This is where your color correctors and color graders come in as well. This is also where your music directors come in to add sound and music to the film. So I think the value chain is very, very extensive. And I think even more opportunities, even more spaces are being generated just because of, the influx of new technologies currently right now. So, yeah.
And that translates to employment, I guess.
Yes, it does.
All right, Marie Amadi Amina, creative industry analyst at Stairs Business. It was great having you on the show today, and Happy New Year.
Happy New Year to you too. Thank you, Laddie.
All right, after the break, we look at the performance of Nigeria's fixed income market and outlook for 2022. That's in a moment. Do stay with us. All right, welcome back. Still watching Business Morning live on Channels Television. Now for our next conversation, let's take a look at performance of fixed income market in 2021 and also get an outlook for 2022. See markets responding to rate hikes globally right now. Let's bring in Omotola Abimbola, our senior investment analyst at Chapel Hill. Danham, great to have you. Happy New Year.
Thank you very much, Laddie, and good to hear from you. Happy New Year.
Good to hear from you, too. So how would you describe the performance of the Nigerian fixed income market in 2021?
2021 was very challenging, no doubt about that, particularly coming off a very remarkable 2020 when fixed income investors and traders had a very, very profitable year. But last year was very challenging in the sense that, the entire market had to navigate a very sharp increase in interest rates, particularly at the start of the year. On a year-on-year basis, we observed that, yields across the benchmark bond yield curve expanded by roughly 500 basis points, with the 30-year bond moving up very sharply from less than 7%, to roughly about 13% by the end of 2021. As we know, bond yields and prices, they move inversely. So the upward movement in yields led to a very sharp drop in prices of fixed income instruments. And on a broad basis, based on an aggregate index, we saw that the Nigerian bond market lost about 13%. on a year-on-year basis in 2021, after adjusting for interest payments. And a couple of factors led to this, very bearish performance we saw in the market. The first one is that the Central Bank of Nigeria, the CBN, who are obviously the most important player in the fixed income market, they were a bit hawkish in terms of their interest rate policy in 2021, particularly at the beginning of the year. They moved up the HOMO, 1 year yield or 1 year stop rate from about 3% at the beginning of the year to about 10%, towards around February, where it stayed to the end of the year. Now, we also saw that the federal government of Nigeria was very active in the primary market in terms of borrowing because they had a record deficit of finance. So, this very strong level of government borrowing also contributed a bit to what we saw in the market. And from a regulatory perspective as well, we saw, the PENCOM more or less, instructing pension fund administrators to reclassify, their head to maturity and their head for trading instruments. So a cocktail of all these factors, the central bank's activity, fiscal authorities, as well as regulatory, changes, led to a very bearish performance in the fixed income market in 2021. What we think, is that for 2022 as well, the market has to be prepared for what is to come.
Right, and I understand that interest rates increased, but what were the reasons for this, and how did fixed income investors actually, how did they fare in general?
They fared very badly last year. Like I mentioned initially, on an aggregate basis, the fixed income market lost 15%, which is quite a lot. And speaking to the factors that drove these bearish sentiments, it started from the central bank, being slightly more hawkish in the interest rate policy. They raised their HOMO issuance rates at some point. They debited banks aggressively for CRR. Much more later, they began issuing what we call, special bills now in place of HOMO securities, which essentially was a way for them to manage liquidity in the financial system. So that contributed to the reversal of fortune that we saw in the market in 2021. Beyond the monetary authorities as well, from fiscal policy, also we saw the federal government being very aggressive in the debt market due to a record level of fiscal deficit that they had to finance. And on regulatory points as well, we saw a number of regulatory changes as well, that led to the performance that led to the weak performance that we had, in the fixed income markets in the year.
All right, now going to the primary market, how did the bearish performance in the secondary market impact, issuance activities in the primary market?
For the primary market, it was a bit mixed. If you look at the Naira primary market, where the governments, corporates and state governments, where they borrow money, we saw a very mixed performance. On the federal government leg, we saw an increase in the level of, government borrowing in the markets, particularly on the treasury bills front, due to the need, for them to spend more money on infrastructure projects and also to finance very large fiscal deficits that we had in the year. Evidently, that led to a significant, crowding out of the private sector borrowers in the market. We saw that, corporate issuances actually, took the back seats. For commercial papers, for instance, we saw that the volume of issuance and the value of issuance, fell by close to 50%, if not more, in some instances. For corporate bonds as well, we saw that issuance activity also declined significantly. But that's to be expected because 2020 was a very remarkable year. Due to the COVID-19 pandemic, businesses, had to borrow a lot to make sure that their business, remained functioning through the pandemic. So 2020 was an extraordinary year in terms of issuances. And beyond the COVID-19 pandemic as well, in 2020, we also had an extraordinary, really low level of interest rates, that led to, many corporate borrowers approaching the market. So 2021, with the increase in interest rates environment, corporates, they had less incentive to actually approach the borrowing, to approach the debt market, to raise fresh borrowing. And that led to the significant drop that we saw in the volume of corporate debt activities in the Naira debt market. But if we look beyond the Naira funding market and look at, the Eurobond market, that's where we saw a bit more activity. The federal government, for instance, they made a return to the Eurobond market where they borrowed about $4 billion, in a triple tranche, offering. We also saw a number of, Nigerian banks and also oil and gas companies, also approach the Eurobond market for borrowing. We had Access Bank, who launched 2 offerings in the year, to raise money. We had UBA, that approached the Eurobond market, Fidelity Bank as well as Echo Bank. We also saw Seplat in the oil and gas sector also do an issuance to refinance a maturity, that came due, in January 2021. So, like I said, it was a mixed performance. Naira funding market was overwhelming for corporates, but on the Eurobond or foreign currency financing leg, that's where we saw a bit more activity, as several companies, due to the tight FX liquidity we had in Nigeria, many had to look offshore, to get foreign currency liquidity.
Right. And another issue now, President Buhari recently signed the 2022 budget and Finance Act into law. What are the key implications for, fixed income investors as we proceed in the new year?
Okay, for fixed income investors, one thing we are going to be looking at for the new year is what exactly will be the level of federal government borrowing in 2022, because federal government is a very big player in the debt market. They are the largest borrower after the central bank, obviously, in the debt market. So what they do in terms of their, borrowing activity, it plays a big part in the direction, in the sentiment, and of course, the momentum we have in the fixed income market. And based on the Finance Act that was signed and also the 2022 budget, it does appear as if, the federal government, will be looking to borrow a slightly lower amount than what they did in 2021. And that could be a positive thing from the market, from an interest rate and crowding out, points of view. But one thing we have to note is that, the assumptions that underline the 2022 budget, particularly on the revenue front, they are quite ambitious. So we're likely to see a very disappointing performance in terms of revenue collection in the year. And that will probably lead to a supplementary budget being introduced, maybe sometime, towards the end of the year. So, I mean, I would still, say that, fingers are still crossed on that, but very likely we're going to see a supplementary budget that will lift the level of, planned government borrowing beyond what is currently being estimated in 2022 budget. Regarding tax laws and other things, the government is still, to a very large extent, very, very conscious in terms of, raising taxes, because the economy is yet to fully recover from the COVID-19 pandemic. So unlike 2 years ago, when we had a very major, tax change, particularly the VAT law, this time around, the 2 major tax, changes that we're expecting for the year, they are much more lower in terms of revenue impact compared to the 2019 finance bill. So, for instance, the government is planning to introduce a sugar tax, which will be applied to non-alcoholic and carbonated drinks at about 10 naira per liter. So that will lead to a very minor increase in revenue collection. Also, there will be a rollback, a removal of exemption on capital gain tax for disposal of shares or equity securities, if it's above 100 million naira. So that will also lead to a slight increase in revenue collection. But in terms of, impact, it is much more less, compared to what we had in previous finance acts. But I think one major tax policy that fixed income investors and traders will be looking forward to is whether the federal government will renew an exemption on company income tax, for fixed income securities, particularly government securities and corporate debt. So, about 10 years ago, there was an exemption that was granted, by the authorities then on the payment of, withholding tax and company income tax, on fixed income securities. But that tax policy then had a sunset clause that's going to expire this year. All that has expired this year. So for most fixed income investors, they'll be looking forward to what the federal government will do, whether they're going to grant an exemption, on this particular tax policy or not. But I do think that from an advocacy point of view, it's very important, for the federal government to actually look into getting an exemption, because not doing so, we impact on their borrowing costs, as issuers begin to price, as buyers of fixed income securities begin to price this into the valuation of fixed income securities. So from purely a demand and supply points of view, it's very important that we grant this exception, and also to make our business environment very attractive, for investors as well. It's very important that we look into finding ways to actually grant or renew this exemption.
That means we can expect a domino effect, from this fixed income tax. Anyway, what is your prognosis for interest rates, moving into 2022?
2022 promises to be very interesting as well. And in terms of, our outlook for the year, I think two major considerations are very important. One is the external financing conditions, which, as we all know, is getting, much more tighter. Central banks all over the world, particularly the major ones in Europe and the US, they are looking to tighten monetary policy, or let me say raise interest rates, due to the high level of inflation and the strong level of growth they are recording. Now, when all these major central banks are tightening monetary policy, that usually has an impact on emerging and frontier markets due to capital flow or due to threats of capital flow reversals. So for many central banks, in emerging and developing countries, some of them are already, some of them have commenced tightening their monetary policy by raising interest rates. Towards the end of last year, we saw, the Bank of Ghana, hike its own benchmark rates by 100 basis points. Some other central banks in emerging markets like Brazil and a couple of others who have also, raised interest rates aggressively. And, what the markets would expect is that the Central Bank of Nigeria will also find ways to tighten the domestic monetary policy as well, to guide against these potential, domino impacts of a much more tighter external financing, condition. The second factor that also play a role, the direction of, of interest rates in 2022 will be inflation rate. In the second half of last year, we saw a very strong disinflationary, momentum in consumer prices, where headline inflation rates finished the year at about 15%, after peaking at more than 18% around May 2021. So the outlook for this year is that we are still going to see a much more, in terms of momentum, the pace of disinflation rather is probably going to reduce, or very likely in Q1 2022 we're still going to see inflation rates continue to head downward. But towards the end of the year, we think that this should have bottomed out at some point. Okay. And with so many, so just to summarize, the outlook is that in the first quarter of this year, due to high liquidity in the financial system, rates are going to remain very low. But towards the end of this year, due to expectation of a tightening of monetary policy by the central bank, we're going to see interest rates actually head northward once again.
Okay, I guess investors have a lot to look out for in 2022. Motola Bimbola, thank you so much for coming on the show. Investment analyst at Chapel Hill Denham. Great to talk to you. Enjoy the rest of your day.
And you too. Thank you.
All right, now let's take a look at what's happening in the market with Anete. Good morning, Anete.
Yes, good morning, Ladi. Yeah, I guess you've been talking about the fixed income markets, and within the last couple of days, we've been focusing our attention on the equities market. So I think it's time I just also take my focus on the fixed income market, if you don't mind.
All right.
Okay. So now this is how it turned out, the fixed income market trading at the FMDQ exchange. The fixed income market is still wearing a mixed picture at the bonds market, at the treasury bills market, as well as the open market operations. So in terms for the bonds segment, it was mixed, but albeit with a bearish tilt. And of course, that market has not been all that active. This is what it turned out yesterday. Number of deals, 7 on the 14th of March 2024, 18th of March 2036. Two of them had that 7 number of deals there. For the treasury bills market, we had 6 deals on the 27th of August 2022, worth about 7 billion naira. And then, of course, at the open market operations, average yield there contracted by 5 basis points to around 5.5%. So that's the picture there. For the central bank special bills, it is also not much of activity there. Number of deals, 5. And that's the most of it, the attention was focused on the 7th of March 2022, later this year. So we will be talking to our analyst, Bankole Odusonya, who is the head of fixed income trading at UBA, to give us more highlights of what happened, especially for the first trading week of 2022. Okay, so we have Bankole now. Thank you for joining us, Bankole.
Good morning, Matthew.
Okay, so the fixed income market, I'm sure you're not all that impressed, especially because it's taking not much of activity there. So can you bring us a run through into Thursday's trading session at the fixed income market?
Okay, the sentiments are now on the short end of the curve, especially for February to May special bills instruments, where there's been a lot of demand, and that was how we closed the year. So in the first week, we've had only one auction, an OMO auction where 50 billion in total was offered for 91, 182 and 1 year instruments. 103 billion was subscribed for the 1 year, and only 30 billion was sold at 10.1. I believe this instrument was correlated to the winners of the auction. But on the secondary market, we have seen very, very, very strong interest on the short-term instruments, because most fund holders right now want to invest on these short instruments with expectation that yields would have spiked in March, April, May, where the government would have kicked in fully into borrowing more to fund the 2022 budget, which is currently at 17.1 trillion. So that's the expectation that is fueling our secondary market demand, which has tilted to the very short end of the curve right now. There are very few trades on the bond end, where most surplus units and those who are statutorily required to buy bonds prefer to go to the primary auction. We are with the calendar for the first quarter for bonds offered by the DMO. So currently the secondary market is largely quiet. We're seeing more activities around the special bills, demand for special bills, which are very, very short, like I said earlier.
Okay, so now, talking about expectation, in a couple of weeks from now, we'll be expecting the December inflation report. As at November, Nigeria's inflation stood at 15.4%. So what's the outlook for the fixed income market as far as inflation is concerned?
Okay, we expect the negative real rate of return to continue for a while, because we do not expect a dramatic fall in inflation yet. Prices are still on the rise, it's been at a reducing rate compared to the last 6 months. We've seen a continuous drop in the rate at which prices were moving, but prices are still moving up. So we expect that the negative rate of return, the gap between inflation and the yield on instruments, will continue to be. Another major issue we need to look at is the probability of taxing fixed income securities in Nigeria. There was an exemption that was signed by President Goodluck Jonathan in 2012 that expires this year. If it's not renewed, that exemption, it means that holders of instruments like bonds or treasury bills or promissory notes, fixed income securities, could pay tax on the yield on instruments. That's coupon or capital gains. These are the assumptions that we are looking at. this could shape the market largely going into the year because it reduces the effective yield and attraction of this instrument, not only to local investors, but the foreign participants who are looking to come back either before or after the general elections that will be in 13 months' time.
So thank you for bringing us up to speed with activities at the fixed income market, Bankole. So that was Bankole Odusoya, head of fixed income trading at UBA. So Ladi, but before I come back to you, this is how the equities market turned out. 3 trading sessions, we've been positive. Year to date, we're at 2.1%.
Quite impressive.
Outlook still positive.
Quite impressive. All right, Nathan, thank you so much for that analysis. All right, we'll take a break now. When we come back, we head to London. Do stay with us. All right, let's take a look at what's happening in the UK with Juliana now. Great to have you, Juliana. Well, there are calls for Boris Johnson to bar Bain & Company from lucrative government contracts in light of a judicial commission finding about, management, the consultancy firm, actually its role in corruption in South Africa. Tell us more about this.
Well, yeah, this has sparked a debate because Lord Hayne, who is a former Labour minister, he's published through The Guardian in the UK, which is a left-leaning newspaper, an open letter that he wrote to Prime Minister Boris Johnson, basically urging him to cut all ties with Bain & Company, which, as you said, is a US-based global multinational a global consultancy firm. They have benefited over the years of several pretty high-profile multi-million-pound contracts with the British government. Some include Brexit consultancy to the tune of about £25 million. They also regularly advise the Cabinet Office, so senior ministers within Boris Johnson's government, for about a fee of £30 million. And this is the kind of consultancy that they were doing allegedly on behalf of the former South African leader Jacob Zuma, who's currently in prison for contempt of court. There's a probe ongoing about alleged corruption that took place whilst he was in office. And, as you said, the South African Commission have found that parts of Bain & Company's consultancy colluded with Jacob Zuma in shaping parts of the economy. So it's a very long-running, ongoing scandal that has plagued Zuma's legacy that's now involved Bain. We've got a statement here, which I think is important to read out. Of course, Bain have denied most wrongdoing. Apparently, they've paid back lots of the money that they allegedly got through illicit means. They said they're willing to accept the lapses in their governance. They've paid back the money, and they said whilst it's highlighting the mistakes on their part, they won't be repeating the mistakes. The Lord Hayne, he says that it doesn't go far enough that Prime Minister Boris Johnson should cut ties. It's a very long-running story. We'll just have to wait for a government response.
All right, I guess we'll keep tracking that one. Another interesting one, I will see bosses of Britain's biggest companies will have, made more money in 2022, by breakfast time today than the average UK worker will earn in an entire year. Quite interesting analysis there.
Well, yeah, I suppose, it could be the same for any country in the world, particularly Nigeria. I suppose that's what you get when you're living in a capitalist society. The High Pay Centre, typically around this time of the year, always produces these figures, which, as you said, shows that if you are fortunate enough to work in a UK blue chip firm and you run that by today, you would have earned more than the average worker would earn in a year. No surprises to anybody with common sense, really, but I think it just highlights the disparities. Unionists are not happy, particularly when this year in the UK is called the year of the squeeze, where those on lower incomes are going to suffer more. High inflation, higher bills, lower wages, tough times, COVID. So, yeah, no surprises there. Not really a fortunate correspondent, I've got to say, Laddie.
I guess the rich getting richer. All right, Juliana, thank you so much. Enjoy the rest of your day.
Thank you.
All right, now let's look at the crypto market. We see Bitcoin there still extending losses below the 44,000 level against the dollar. Bitcoin remains at risk of more downside unless there's a break above the 45,000. We see Bitcoin struggling there. It's at $41,502. Market cap right now below the $2 trillion mark, down 8%. It's not been there since September last year. 24-hour volume traded in the crypto market, about $112 billion. See price of Bitcoin, $41,500. It's down 3.54%. Volume traded in Bitcoin, $33.26 billion. See Ethereum there, far from the $4,000 mark, $3,179. It's down 7.83%. This sell-offs continue until today, Friday. We see top odds by market cap. See BNB there below the $500 mark. It's down 5%, $442. Cardano, $1.20, down 0.98. And the XRP losing the 80 cents range. Dollar, it's at 74 cents, down 1.99%. Let's bring in Solomon Amunde now to give us analysis. Great to have you, Solomon. Good morning.
Good morning, Larry. Good morning.
Yeah, Solomon, the markets are not looking good in the crypto space. You see there's extreme fear right now. How should traders manage risk?
Okay, so right now, I feel most traders should have moved the bulk of their funds to USDT. They should be on stable coins, having more of their portfolio. At least 60 to 70% of their portfolio should be in stable coins, while the other 30% should be in assets with very strong fundamentals. Talking about the likes of Terra Luna, THR, AVAX, little on Bitcoin, because I still see Bitcoin retracing to about $40,000. And the worst case I'm looking at is we hitting about $35,000. And once we are able to hit that very low, then we would be heading all the way up, and we can still go as high as $55,000 this year.
All right, but where are you expecting a bounce for price of Bitcoin?
So we played around around $46,000 and $48,000 for almost a month. Yeah, so we wouldn't see a bounce until we have been able to clear out the fear and all the buy orders that are hovering around $40,000 to $42,000. So roughly, I would say I expect a bounce within the next 3 weeks to 1 month.
Okay, what altcoins, you know, I know it's a bloody market right now, but what altcoins are holding up well right now?
Yeah, so far so good. We have seen Link. Link has been holding up very, very well, like really well. And we've seen Phantom blockchain. Like there's so much happening in the Phantom blockchain. I mean, just this year alone, I personally have made a profit of over 400% on Phantom blockchain alone, despite the whole crash. Yesterday we saw Phantom drop to about 2.6, and afterwards it went back to about $3 again. And so far so good. It's been doing very well. So I would advise most persons to channel part of their funds to the Phantom blockchain, and they can make good returns, at least 2x.
Even in a bloody market. All right, Solomon.
Especially in this bloody market.
All right, Solomon. Thank you so much.
It's all right.
All right, let's look at the top gainers there. See Quant up about 10.58%, and Decentraland rising in this type of market. We see Mana there up 9.80% at $3.14. Decentraland had a great run with the whole metaverse I think going on, and Atom there $40.51. It's up 9.24%. And Harmony regaining there, it's 29 cents, up 5.21%. And we see Yield Finance looking at the top losers counter now. We see Aave is topping that counter, is down 11.13% at $203. CeeLo $4.48, 11.12% down. And Arweave there, $49.94. So it's even Sushi Swap there, down 10.08%. So it's a really bloody market with double gains, double losses with altcoins. Bitcoin, obviously, once Bitcoin is volatile. You see that the altcoins actually lose their speed, even though they were actually looking good. So now traders are watching for the next bounce, for Bitcoin to know when to re-enter the market or still stay on the side. Remember, this is a very volatile market, so you need financial advice from a professional to play in this market. All right, that's the show today. Thank you so much for watching. Remember to join us at 1:30 for Business Incorporated for more updates and developments in the world of business. Enjoy your weekend. I'm Ladi Williams. Bye for now.